whole 50% Tesla growth thing, I guess we can all forget about it for the next 2 years. It can drop by a lot. From $220 drop all the way to $75 is totally possible. So just be prepared to see a huge loss on your Tesla in the next 2 years.
I have a very interesting question. Because according to your own number crunching, right, you tell me Tesla is worth $75. And then you hold Tesla at 200 plus. I don't understand this logic. Can you help me reconcile this idea?
Actually a good wake up call for people who are like buying 80-90% or even 100% into Tesla.
Welcome back to another episode of the Backholder Pod. So just this episode, Bunti will be reporting sick. That's why it's not available with us today. But Tesla, it's in the hot seat today. Last 5 days, it's down 15%. And even in the after hours, it's down another 1%. What exactly is going on?
Tesla earning was bad, I think. Like the revenue missed the expectation, profit also down. The most important metrics I think investors are looking at is other than deliveries, is the profit margin. Gross profit margin, I think, was like 17 point something. That sounds decent until you look at the net figures. So I think investors are not very happy. And then as usual, Elon loves to come out and sound the doom alarm on the economy. So he was saying that next year, if the interest is going to be really high, then it's not going to be good. I think the 50% year-on-year growth, multi-year horizon, I think they kind of like scrape it already. It's like they're not going to make that 50% growth. On the bright side, right, I think the energy sector was doing okay. Updates on the Giga Mexico, he was saying, Elon was saying that he's not going to go like full tilt on building it out. Like it's not like Xiong like Giga Shanghai. Don't want to go bankrupt lah. I think he referenced the GM and another company say that they went bankrupt during the last crisis, so he's very, very cautious. He don't want to do it. And another bad thing, right, that happened was he talked about the Cybertruck, right, which was very, very anticipated. And somehow I think he was mentioning that they need to refine it so that the cost of building it out, getting it to production volume, it needs to be profitable. So the implicit thing is they're building it now and it's not profitable. So since they're going to start delivery already, so it means that for every Cybertruck they deliver, they're going to start losing money on that vehicle. So it's like growing up pains. Like every production line will be the same. When you're first starting out, you make a loss. But I think now investors kind of have a different expectation for Tesla. Kind of expect them to like, wow, you built Model Y, best-selling vehicle. Then now you're telling us your new Cybertruck is going to lose money. So I think the reaction from the investors is not that enthusiastic towards I think margin down, gloomy outlook, and then Cybertruck forecast not good. Giga Mexico also, slow to build out. So the 50% year-on-year growth also out of the window. So on first glance, I think there is a lot of not very good points, I would say. The good points, probably only a couple, like they are saying that they increased their compute by 100% quarter on quarter. So that was one of the two bright spots. The other being the energy department, which is still relatively small.
So has it changed your thesis on Tesla? This earnings report?
I kind of expect their margin to keep on going down. I kind of expected that. Like it's been going on for like a year or so. They've been slashing prices. So nothing new on that front. I'm hoping that it's not going to be like a very big loss per vehicle. If not, that is really going to screw with the profit margin. Yeah, it's already 7.6 and they haven't even taken into account the recent slashes in prices. I think we should start to get concerned when it's like going down to below 5%.
Okay, so I guess at least the good news for Tesla is that, okay, at the bottom, the cash and cash equivalence is positive, zero debt basically. The Tesla Energy, even though it's a small part, is becoming a higher margin business thing. So as compared to their car. But the part that's dropping is actually the car part only. The rest still remains quite stable. So in the end, Tesla is still a car company. So it's relying a lot on car revenue. The Cybertruck, it will start delivery in November, but it won't start earning money for between the next 12 to 18 months. So and it might even be loss making, right? Like what Eric said. So that whole 50% Tesla growth thing, I guess we can all forget about it for the next 2 years. The cost of goods sold has dropped. So I guess it kind of balance out their margin dropping also. So I guess it won't be that bad lah. Like imagine when cost of goods sold was higher back last year lah. Long term wise, I'm still not worried about Tesla. It's still a good company, even though it's starting to slow down a little. Like what Elon said, it's mostly because of the economic issues. So when the economic issue resolves itself by 2025, hopefully, things will turn back out. But in the bad, there's progress. Energy is doing better now. There's more data collected on FSD. Tesla is going to come out with another budget vehicle. The insurance thing probably still going on. I gave Tesla about a $50 valuation that was back then. Now it's about $75 in intrinsic value lah. Here, it can drop by a lot lah. From $220 drop all the way to $75 is totally possible. Even though many of you guys don't like Chicken Genius, this was his chart astrological prediction also. It can drop to around $69 if we break the trend line. So it's pretty close to the intrinsic value that I got, which assumes that Tesla has a 25% free cash flow growth rate. So just be prepared to see a huge loss on your Tesla in the next 2 years lah. What does Chicken think of this? We are probably going to join you in the big bet holding camp very soon.
I think it's fine lah. Both of y'all have relatively lower costs. I think y'all still green, right? So it's okay. When the times gets tough, all companies will get strangled in a way. There's tensions on the margins, on the growth rate and whatever. It has played out multiple times really, but I really just wanted to ask, like, when I look at it from, let's say I'm already an investor's perspective, right? Let's say I'm also holding onto Tesla right now. Maybe I'm in the green, maybe I'm slightly in the red. Interest rate continues to remain relatively higher. You know that sales is going to get hit. Elon also said that he's ready to sacrifice margins for growth. Why would not a typical investor be thinking like that? I sell it first lah. When I see the recovery come, then I'll come back in again.
For now, maybe for the next 3 to 6 months, we can guess what is going on, right? Tesla will reduce its average selling price. The Fed will continue to keep rates high, probably even raise rates one more time. Yeah, basically there's basically no good news for now lah. So why not just sell now instead?
Yeah,
I think
why
for
not sell
me,
now instead?
basically, I'm a lazy investor. Selling is possible, but first you have to know when to go back in. If that's what everyone is thinking, right? This holding can be manipulated. Like, they will trick you into selling first, and they will buy back immediately when it's low enough. That's what happened earlier this year when Tesla touched $100. It immediately went back out straight to $200 within I think 1 or 2 months. So if you decide to sell, you probably miss all the way at the bottom. No, the whole thinking of buying at the bottom sounds good, but it's not realistic. Like, okay, let's say you sell everything. Let's say you sold $100,000 worth of stock. Then when Tesla touched $100, are you going to dollar cost average in, or are you going to slowly dump back in 20% every time? Then by the time you dump back in, Tesla is already at $200 already. Then probably your average cost will be way higher than what you have sold. My strategy is a lot simpler. If I think Tesla will go down, I will just sell option cost at a much nearer strike price, so that there's a lower chance of it getting called away lah. And you have to reduce my cost basis.
Because I don't know how to time the stock. How do I know when to get back in?
Bullshit lah. You are like our king of astrology.
No, actually I'm not very 准 man. Like if I was so good, I would have bought Tesla at about 10 something. one thing I realized about stock investing, right, is like when the story you can tell, right, is very, very, very pessimistic, right? That is probably the lowest point already. Now we're still not there yet. We're still not like, okay, there was like 6 very bad points that I brought up earlier. There were 2 barely sparkling little points. So we're not 100% dark yet. We need to be 100% dark. Wow, then everybody like, sell that's the time.
Tesla needs to be really losing money, right?
So that's your benchmark, right? Of knowing when is the bottom.
I don't know, kind of like when you really see the story, the narrative being told, right, is all bad, right? Like the foreseeable future is all going to be bad. Then that's when you get a real opportunity. But sometimes the crisis,
富贵险中求.
yeah, 富贵险中。So you don't know whether that crisis will it turn out to be like full blown or it's like just a temporary blip. Because like even for Meta, there was a few times also this happens, right? Like Cambridge Analytica, and then their more recent one, they're saying all into like this augmented reality. And then so they were saying like, wow, we dump like don't know how many billions, 100 billion or something. Then so all the investors like, wow, freak out. Then they sell the stock until like $80 or something like that.
I think a common thread that I can see when you compare to Meta or even Nvidia, right? Nvidia also went through that 300, 100, and then now 400 plus, right? Is metrics across the board are really disgusting. Tesla is not there yet. Nvidia dropped revenue by 20%. 20%, huh? Not 20% margin, drop negative 20% growth. That's the year-on-year comps. Yeah, then I think for Netflix it's also the same. They also started losing subscribers.
Sorry, I was thinking about Netflix.
Yeah. So you see, if you look at a few of these names, Nvidia, Netflix, Meta, that went through this whole valley of death and then came back up. When they were going down, it was really, really very bad. If Tesla is able to hold whatever they're doing now, I think it's not that bad, to be very, very honest. Because let's not forget, they're still selling cars, and at interest rate so high, they are really doing a pretty good job, to be very, very honest. That's just the nature of the industry and the nature of the products that they're selling. But I think for companies that are more subscription basis, Meta, not subscription basis, but more user, more less capex, looking at growth on users and stuff, Netflix, Meta, those are the metrics are really, really quite ugly. That's when you see that kind of collapse. So yeah, that's just some general thoughts. I think generally, if you want to look into investing in distressed times, right, that's something that you have to be comfortable with. Like uncertainty, suddenly margins just keep dropping, then suddenly you see it recovering. It's really, really very hard to time the market. So, which answers Kelvin's question. I do have a follow-up question for Eric though, because Eric was talking about like monitoring margins and how Tesla is doing, right? So let's assume that if 2 quarters in and their operating margin really dropped below 5%, would that be a contingency or would it still be a diamond hands?
I think for me, it's not so much of selling, is whether or not, like I'm really observing whether is there like a opportunity
To increase your exposure
a little bit more at a cheaper price. Like it has to be significantly cheaper I have confidence that they will ride it out Like the EV transition is not going to stop, and doesn't look like any of the other automakers are going to make it happen. I mean, BYD is doing great, but that's basically about it. No other automaker comes close. So even if we are just banging on automakers margin, I think they are in a pretty good position. Yeah.
What about floating the idea of them being able to solve FSD? Let's assume that a few years down the road, if they haven't solved it, would it severely impact the valuations of the company?
I think it will not fly to the moon. It will not fly to the moon, but just replacing the ICE vehicle fleet, right, is probably good enough to sustain like a decent valuation. Yeah, 20 million cars, I think it's all right. It's all right. But just of course with fingers crossed, just hoping for the FSD to come to pass before Elon pass away.
For FSD, I actually have high confidence that it can be solved within the next 10 years.
But 10 years
because
is a very long timeline, right?
is like okay, so the reason is because they recently moved their entire AI FSD thing into this whole dojo thing, right? So in the past, FSD was the way they did it is they look at a certain scenario. If it doesn't move the way they wanted to, if the card didn't move the way they wanted to, they will actually go into the code itself to change the parameters so as to fix this. They're removing the hard code part and putting it into this dojo computer so that the fixing part will be done by the AI rather than by real humans. So this this makes training the FSD a lot simpler, probably a lot faster too. And if you just compound it with the number of people who owns Tesla, because they are still selling cars, even though it has dropped, they are still selling cars. So every day more people drive, more rich people. Okay, maybe now not so rich people drive Tesla cars. The faster that it will get stopped.
Yeah. So most of the big players, I would say most of them are in, except I think I don't see Stellantis, but most of the rest are all in, which is I think a good thing lah.
Imagine BYD appears on this list.
Can it be? Oh yeah,
on the
actually
US
can.
side.
Actually can, because I think the infrastructure BYD has in US is still not that great.
Yeah, so BYD will be dominant in China, but in US they'll be forced to join this.
Makes me very bullish on it lah. Like infrastructure is not something that you can overnight build it up. They took like more than 10 years to build to this scale. And every one of these charging stores, they can like act as a landlord lah. Yeah. So even if FSD delays, right, they can leverage on this.
I think the fundamental logic is also to act like petrol stations, right? At the end of the day,
Yeah.
to displace the other part of the ecosystem.
Right.
I think I wanted to echo what Eric said, because I think I did a very simple back of the envelope analysis on Tesla before, a few months, at least I think nearly a year back. So I do agree with his opinion where if they are just holding onto the car business, let's assume worst case scenario FSD doesn't come into fruition, it still commands a relatively high valuation just because they replace the fleet. When Eric say there's significant enough margin for him to enter, then maybe I'll think about it.
At $5.
No lah. Actually, I have a very interesting question. Because according to your own number crunching, right, you tell me Tesla is worth $75. And then you hold Tesla at 200 plus. I don't understand this logic. Can you help me reconcile this idea?
This logic is the bet holder logic lah. All of us understand it.
So do you not believe in your numbers? You don't believe in your own calculations, is it? Because to me it feels like you don't.
Okay, so this intrinsic value is a totally different thing from the actual stock price. Actual stock price is whatever value that people are willing to buy the stock at. So like you see Singapore, all the hawker food, you think it's worth $5? No lah, you just add in all the labor cost, whatever, it's probably just $2. They are just selling you at double the cost. Yeah, they are able to sell you at such a high cost, especially at those atas hawkers like I don't know, those like the fusion one, all the hawker owners are young people one. The food are easily like $6, $10 chicken rice, those kind of price. And people are willing to buy it because they are able to sell it because people are willing to buy it. So I guess this is the same for Tesla, right? The intrinsic value is probably just the base value, but everyone is running over each other to buy Tesla at $200+ right now, which makes that a legit price for Tesla right now lah. But will this price hold? The moment people stop believing in Tesla, then Tesla will just crash back down to the intrinsic value lah. So I'm just part of the FOMO group.
That's a very interesting thought process though. But Eric, have you crunched your own numbers before? Do you work out an IV for Tesla on your own?
Mine is based on astrology, so
so you don't crunch numbers lah. You look at TA.
I don't. I think I shared before, like when I first got in, I got in by mistake because of options missnap.
Sell put lah.
Yeah, so I screwed up and I got assigned. And then from then on, I was a little bit lazy to sell. And then so I thought like, hey, maybe just buy to make it a round number, etc., etc. And then I think the flip side of what I told you earlier, right? Like when everything is doom and gloom, it's a very good time to buy, right? The worst time to buy is when everything is hot and rosy. Yeah, this is the second time I think I made such a mistake. Like I will call it a mistake because there were better times to get Tesla. I got it when they were about to include into S&P, and then all the stories, narratives then was like hyping up the stock law to very sky high valuations. In Chinese, I think they call Hua Da Bing. They're like drawing a very big biscuit. And then I'm like, wow, look at that biscuit, it's so big. So I bought it and then promptly crashed like 90%. Okay, so I think this is the second time I did that, but thankfully Tesla didn't crash 90%. It only crashed 70%. So I think I have improved.
But actually, if y'all don't mind sharing, right? Actually, Kelvin and Eric, what's your cost on the position now?
Mine
Roughly.
is 233 for the average cost.
Considering that you say you bought during the hype, I don't think it's especially high, right? Because it went over to 400 nearly.
Yeah, because I dollar cost average in
Okay.
after the options thing. So I bought it when it was correcting. I bought some, but I didn't really dare to buy when it was like $100.
Kelvin,
Mine about 213 lah. Not too far off.
that's with all the options premium that you collected or without?
Without lah.
Oh, so options, then you went down quite a lot, right? The cost price.
I never go and calculate that, so I'm not sure.
Okay.
Probably it went up or went down. I never keep track.
Right. No, I think generally at the current position where the prices are at, not considering everything, all things considered, it's not too bad. You guys are roughly break even, and I think Kelvin is probably profiting from it because of all the options he has done for the last 2 years.
Actually, a good wake up call for people who are like buying 80-90% or even 100% into Tesla. Because if you think this is a company that you can retire on. Like I remember last year, Darren made a video how you can retire from Tesla in like what 5 to 10 years. They show very nice calculation and this kind of stuff. So that was the dream, right? Tesla growing at 50% year over year, that kind of stuff for the next 10 years. So when reality sets in, that's when it's a good wake up call for people who thinks that this is possible, which I think is possible, but also the not possible part is also very likely, right? So even in Tesla, there's a 99% chance Tesla will go up. If you are willing to bet that 1% chance that Tesla won't do well, and you are betting your retirement on it, just be aware that you're probably never going to retire. And if you are the kind of person who hates CPF, that's even worse, right? You don't top up your money into CPF. You throw the 8K into Tesla, then Tesla go and crash 50% on you. Your retirement is F already. So
very good.
Just think about diversifying a bit. Don't need to trust Elon so much. Even Elon is a bit right now a bit haywire. I don't know what's going on with him. So that's the reason why I'm diversifying since late last year already, because I realized this. Once I step out of the whole echo chamber, I realized this is totally possible. So I already step out of it. Imagine I've continued buying into Tesla now. My portfolio is probably 90% Tesla, which is not now. I think it's like 60%. Then I see this huge crash. My whole plan of retiring early is delayed by another 1 to 2 years again. But because I dollar cost into S&P 500, I managed to salvage the plan a bit lah. Yeah.
But I think just to kind of tie up the entire discussion for Tesla specifically, actually after hearing you guys talk about having a wake up call, Tesla might not be such a good all-in instrument, then maybe I'm actually even more intrigued to look into it more and to do more studies, because it seems like even the bulls are slowly losing steam and losing faith already. So I'll look into it, then I'll get back to you guys again. We can have another Tesla special episode. But yeah, hope you guys enjoyed the discussion. If you guys disagree, you guys think that, and with that, we'll see you in the next video. Goodbye.